and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. Let's have a look at the stories for the day. It seems D&D filters and regulatory restrictions have failed to curb the menace of unsolicited calls and messages. Even blocking phone numbers doesn't work, as spammers keep on surprising us with new ones. The government too knows it. The Telecom Regulatory Authority of India last week asked telecom operators to crack down on spammers. Bhaswar Kumar's report offers a peek into this dark world of spammers and tells us why this is such a big menace and what can be done about it.
India's finance minister was having an intense discussion with opposition leaders to break a political logjam, only to be interrupted by a call. The FM received it. After a few moments, the leader made a face and told the caller, No, not now. I'm in a meeting. When asked, the FM said it was a finance company that had called to offer him a home loan. The FM apparently used to receive 4 to 5 such calls every day. That was 2013 and the finance minister was Pranab Mukherjee. The leaders he was in dialogue with were late Sushma Swaraj and Arun Jaitley. Despite many efforts, the fight against unsolicited calls and messages or spam continues even a decade later. On February 16, the Telecom Regulatory Authority of India directed telecom operators to stop spammers that had found a way around the protections brought in recent years. TRAI's press release said that it had issued 2 orders in the matter. So, what prompted the authority to act? Regulations were introduced in 2018 that covered messages such as one-time passwords. However, according to reports, it was found that the systems put in place after these regulations were being subverted to deliver spam instead. Under TRAI regulations, transactional messages like OTPs can only be sent by an organization if the template for such messages has been registered on a blockchain ledger maintained by telcos. According to TRAI's recent press release, it has been observed that telemarketers have been misusing headers and message templates belonging to registered parties. Now, TRAI has directed telcos to block all unverified headers within 30 days and all unverified message templates within 60. TRAI has asked telcos to re-verify all registered headers and message templates on the distributed ledger technology platform. The directions could ensure that all promotional messages are sent through registered telemarketers and using only approved templates. And how bad is the spam problem in India? To quantify the magnitude of pesky calls, local circles conducted a nationwide survey, which received over 56,000 responses from citizens across 342 districts of India. It found that 66% of the mobile subscribers surveyed received 3 or more pesky calls each day. It also found that 92% received unwanted or pesky calls despite being registered on the Do Not Disturb or DND list. According to local circles, this indicates that the DND lists managed by telecom operators are ineffective in stopping unsolicited commercial communication from marketers and business or service providers. And where are these calls coming from? Local circles found that 78% of mobile subscribers surveyed reported that the maximum unwanted calls were from the financial services and real estate sectors. The situation on the pesky messages front isn't any better either. A separate national survey from the same organization found that 51% of WhatsApp users surveyed received 4 or more spam messages each day. Meanwhile, 68% of mobile subscribers said they received 4 or more promotional or spam SMSs every day. In fact, every subscriber surveyed was receiving spam. So, will the latest action by TRAI help, and how?
Where the order lags and where I think work is needed is there is no easy feedback mechanism for a consumer or a subscriber to report when they get a pesky SMS. And, it has to be very simple. And, it should be something which is a single click. Somebody clicks on a message, just like you do on email saying report junk. You say, report a pesky SMS, and you just click once and you're done. And I think that feedback should then feed into the entire management of, the different senders who are sending pesky messages and blocking them. So that's, on the pesky messages. The order does not address much of the pesky call issue, which is a much bigger issue because, it's much more intrusive.
Telcos have opposed the mandatory implementation of calling name presentation or caller ID. Instead, they have suggested that it should be offered as an opt-in feature. One challenge in implementing it is the lack of enabled devices in India. So what more can be done about pesky calls?
A much more broader solution is needed where, if somebody, a user basically should be able to identify or give feedback when they get a spam call, again with a single click. And when enough users do that against a particular number, that number should be barred for calling, for outbound calling, let's say for a period of 1 week to start with, and then a month maybe. And then, the Aadhaar number gets tagged. So when that same Aadhaar person goes for getting, another SIM card with any operator, because the whole system is integrated, essentially, they have to give many more declarations or give some kind of a security deposit. So I think that is where the solution lies.
Telcos are right in saying that there is no support at the device level, and frankly, the punitive measures have not helped much. I believe we need a joint effort by the regulators, the government, at the OS level, along with the smartphone brands as well. So India is about 95% plus Android market. So with Google, I think there is at device kernel level some support is required. See, at an Android level, what I meant was just like Android, Google has a feature in some of the developed markets like call screening, where you can actually ask that why the person is calling before you decide to pick up the call or decline the call. Why can't that be done in a country like India?
And is there a solution to the proliferation of spam on WhatsApp?
There, what we have done is we have escalated to MeitY. And I think there the government will have to work on this with WhatsApp and find a mechanism where basically, users can again provide feedback easily.
Citing an RTI reply, Medianama has reported that the government does not have data on the number of spam calls that were made in 2022. This is surprising since a report by Truecaller said that out of the 20 countries it surveyed, India had witnessed the 4th highest number of such calls in 2021, up from the 9th highest in 2020. As a good starting point, the authorities may want to consider management guru Peter Drucker's words, "If you can't measure it, you can't manage it."
India, meanwhile, is facing another pressing problem. It is spending just 0.6% of GDP for research and development, due to which it is not able to reap the benefits of technological innovations. And it is not just the government. India Inc. too is tight-fisted. But why is it so? Tushar Verma's report brings you the answer.
India's spending on research and development, or R&D, is one of the lowest in the world. This is what the government's top public policy think tank, Niti Aayog, had said in its 2021 report. A study conducted by Niti Aayog, an Institute for Competitiveness, had found that India's gross expenditure on research and development, or GERD, is at a mere 0.7% of GDP. The report suggests that GERD should be at least 2% of GDP for India to become a $5 trillion economy. The report highlighted the importance of the role of the private sector in R&D growth. R&D in countries such as the USA, South Korea, and Germany are led by the private sector. So why is the private sector's expenditure in R&D in India so low?
It is true that Indian companies, the R&D spend is lower than several developed countries. I think it is largely a function of the size of these companies, the low profitability that they have compared to their peers abroad, and also a function of the fact that we are at a stage of evolution where we are still at contract manufacturing, or in the case of electronics, at electronic manufacturing services, and not really product development as yet.
India is the world's 5th largest economy, but in R&D investments, it is ranked 16th. India's R&D expenditure as a percentage of GDP is just 0.6%. China spends 2.4% of its GDP on R&D, while Japan spends 3.2% and Germany 3.1%. Naushad Forbes, co-chairman of Forbes Marshall, recently argued that while companies across the world invest 1.5% of GDP on in-house R&D, Indian companies invest a meager 0.3% of GDP. Total investments in R&D is a whopping $2 trillion. However, almost 3/4 or 75% of this investment goes in just 5 sectors: pharmaceuticals, automobiles, technology hardware, software, and electronics. Out of all the sectors in India which carry out R&D expenditure, firms in the pharmaceutical sector are the highest in number. So, what Indian companies are losing by not investing in R&D?
It is obvious that if we are to aim at a more sustainable, a more profitable business, R&D innovation plays an extremely important role. Having said that, the definition of R&D and capturing all improvements, even Kaizen activities for that matter, or product adaptations, design adaptations into the R&D is not always done. And hence, sometimes I do feel that we do not reflect correctly our R&D expenditure.
Recently, Kiran Mazumdar-Shaw, the founder of Biocon Biologics, said in an interview to Business Standard that the company saw a huge jump in R&D expenditure. In fact, Shaw went on to say that the ratio of R&D expenditure and revenue was something Biocon is not comfortable with. The ideal scenario, according to her, would be to cap R&D expense at 12% of revenue. While Biocon may try to reduce its R&D expenditure, India Inc. overall spends only a fraction of its revenue in R&D. India is home to big IT firms. However, R&D expenditure is limited to a mere 1% of revenue, while Chinese companies spend 8% of revenue for R&D. So, what can we do to boost R&D expenditure of India Inc.?
The collaboration between the government, industry, and the academia is not seamless. It can be made better. There are not enough industries setting up R&D centers in institutions. Enough amount of money or the budget is not spent on skilling the youngsters. More and more academic interventions or industry interventions in academia is essential. So that is what I felt. That is what I'm talking about. And looking at maybe in institutions that are specialized and subject matter experts in different spaces, not only in technology like IITs or other engineering institutions.
Despite being the 5th largest economy, India Inc. still has a long way to go beyond offering manufacturing services and contract manufacturing. Unlike Germany, China, and Japan, the country also lacks enough investment in academia, one of the key drivers of innovation. In this backdrop, the way ahead for the private sector is to increase its R&D expenditure and more collaborations with governments and academia.
Moving on, the surge in gold prices is typically positive for the gold financiers as it leads to better loan demand and a decline in gold auctions. However, intense competition from banks and fintechs that offer low interest rates is reducing the market share of conventional gold loan companies. So, how should investors juggle between these contrasting developments? Are gold financiers worth investors' money? Our next report takes a deep dive.
Rising gold prices usually means good news for gold financing companies Muthoot Finance and Manappuram Finance. This is because customers rush to such non-bank finance companies in hopes of higher loan amount for the same mortgage. This time, however, may be different. Gold loan NBFCs are now facing stiff competition from banks that begin pushing loans against gold amid the onslaught of COVID-19 pandemic at lucrative interest rates. Currently, NBFCs charge interest rate anywhere between 10 and 24%, while banks charge 7 to 17% interest per annum. As a result, the share of gold loan in banks' portfolios increased to 5% in FY22 from around 3% in FY20. NBFC's market share on the flip side slid to 20% from around 23% during the period. Going ahead, Cyril Charlie of Geojit Financial Services opines, gold financiers would look to maintain their yields and rely on non-gold portfolio diversification to support overall AUM growth. While this may improve margins, though not to their historic highs, overall business growth is expected to remain slow due to intense competition from banks. During the October to December quarter, Muthoot Finance saw flat quarter-on-quarter gold loan AUM growth at 56,800 crore rupees. Manappuram Finance, meanwhile, saw a 3% sequential and 9% yearly decline in gold loan AUM at 18,600 crore rupees. That said, Veer Trivedi of Samco Securities believes the recent correction in stock prices offers entry point from long-term perspective.
From their highs of November 2021, both companies have witnessed significant correction. The correction resulted in both companies trading below their 5-year median P. This derating was mainly on account of an intense price war happening in this segment. As this unsustainable price war has come to an end, and with these companies trading at cheap valuations, the stock price performance have been decent in the recent past. However, gold loans as a segment would continue to be vulnerable as competing against bank would remain a key challenge for them. Manappuram Finance has diversified its AUM, and now gold loan AUM constitutes only 42%, which gives it an edge over its peers.
The near-term prospects of gold financing companies remain cloudy until they pivot their business models to lower spreads and margin, complemented by steady gold loan growth. However, cheap valuations make them attractive for long-term gains. This week, monthly FNO expiry, minutes of the RBI's February meeting, and global cues may keep the markets volatile. As per technical charts, the Nifty may face resistance around 18,000 level, while the Sensex could test 61,800.
Gold imports saw a steep drop of 76% in January from a year earlier due to subdued demand. Now, this drop may further narrow the country's trade deficit if all goes well. Meanwhile, India is looking to export home-made fighter jets now. Argentina and Egypt have shown interest in Tejas during the just concluded Aero India show, where the light combat aircraft showed its mettle. Tariq Ahmed's report has more on Tejas.
Light Combat Aircraft Tejas is a fourth-generation single-engine, light multi-role supersonic aircraft manufactured by Hindustan Aeronautics Limited or HAL in collaboration with Aeronautical Development Agency. India had started Light Combat Aircraft or LCA program in 1983 to phase out the aging Russian MiG-21s, which were the mainstay of the country's air force then, but were retiring in the 1990s. The first Tejas aircraft was expected to be built by 1994, but after over 7 years of delay, the first indigenously built fighter jet took to the skies on January 4, 2001. The then Prime Minister Atal Bihari Vajpayee had named it Tejas, meaning illumination. One of the reasons for the delay was the country's attempt to build an efficient engine, which met with failures. Sanctions slapped by the US after May 1998 nuclear tests was also one of the reasons for the delay. In 2013, the then DRDO chief V.K. Saraswat, claimed that the US sanctions pushed the projects back by over 2 decades. After 28 years and after multiple trials and updates, Tejas aircraft finally received the certificate for release to service in 2011. In November 2016, the then Defence Acquisition Council, chaired by Manohar Parrikar, cleared the acquisition of 83 Tejas Mk1A variants. Parrikar played a crucial role in taking Tejas project to the skies. Currently, Tejas has 3 production models: Tejas Mark 1, Tejas Mark 1A, and Trainer. Tejas Mark 2 is at conception level and is expected to be introduced in 2026 by HAL. Both the existing variants are powered by General Electric's engine F404IN20. Tejas Mk1As are the smallest and lightest in the supersonic fighter aircraft category. It has 800 km general range. It can carry laser-guided bombs beyond visual range, air-to-air missiles, air-to-surface missiles, and anti-ship missiles. The ability to refuel mid-air will also increase the range of the aircraft. As of now, the IAF has ordered 40 Tejas Mark 1, 73 Tejas Mark 1A, and 10 trainer aircrafts. In the long run, the Air Force plans to induct 324 aircraft in all variants, including the Mark II. Till 2020, the Indian Air Force had 30 squadrons, while the sanctioned strength is 42. Induction of indigenous Tejas will certainly fill the gap. By 2030, the squadrons of Tejas will increase to 6.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Critics, meanwhile, point out that there is still a long way to go before we can call Tejas completely indigenous. Its engine comes from the US, while the radar system is from Israel. The upcoming Tejas Mark II will have indigenous radar system. That is all for today. For more news, views and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.